Now, my third concern, and this is probably one of the main reasons why I would never invest in Fundrise.
What?
And this is because their dividends are taxed as ordinary income at your ordinary income tax rate. Now,
wrong.
this is a train that runs all the way from downtown LA
just 600,000. Hey, hold on. Hey, just 600. Hey, just 600,000. Hey, just 600,000. Hey, here we go. Hey, I just take it. Just take it, bro. Just take it. Hey, 600,000. Hey, 600. Just take it, man. For the shithole, man. Take 600,000 for the shithole, yeah.
Development around this expo line, and it's just moving east.
Ridiculous, bro.
What's up, you guys? It's
Graham.
So this gets brought up a lot.
I'm sure.
Real estate investing
hey,
with
listen,
some pretty
I am sure in 2018, when this video was released, everyone was new to Fundrise. Everyone was asking questions. What Fundrise is it legit? What it's all about. Now that we're in 2020, we obviously know that Fundrise is an amazing platform with amazing returns, an amazing management team. But let's keep reacting to the video.
Substantial returns. So what do I think about it? Is it legit? Is it a good way to invest in real estate? Or is it just an overly simplified website full of buzzwords to get you hyped on giving them your money?
In 2018, in 2018, the Fundrise website was very, very basic as compared to now. It did not have much information there. It wasn't appealing. It wasn't user-friendly. But if you look at the Fundrise website now, it's amazing. It has all the information at a click of a button.
Well, let's find out. And just to preface this video, I had absolutely no idea just how much research goes in behind the scenes to make a video like this.
Hey.
I thought it would be as simple as just reading through their website and then coming up with my own conclusion.
Exactly what I said. Their website was very, very bad in 2018. Hey, that was like no information.
But boy, was I wrong. To make a video like this, I spent 4 hours reading 225 pages of their fine print. If you guys
4 hours? That is 60 pages an hour, 1 page a minute. Graham, listen, I know you're a smart guy. You're one of the biggest YouTubers out there, man. I'm a big fan. I already liked your video. I watch your videos all the time. But damn, I did not know you could read so fast and absorb all that information. Props to you, man. Keep up the good work. Heck yes.
I appreciate that.
Yes.
Make sure to give the video a like. So let's start here.
Did.
What is Fundrise?
Hey, let's figure it out.
I literally can't say Fundrise. Fundrise.
Fundrise.
Fundrise.
Fundrise.
What is Fundrise.
Fundrise.
That sounds like Fundrise. So let's start here.
Fundrise, a crowdfunding real estate platform. Hey, listen, you get the capital, you get the money from your investors, you raise the money, you fund it into different projects. Let's go.
What is Fundrise? Because I had absolutely no idea what this
Me
company
neither.
was until
like end of 2019.
So I did my research.
Okay.
A lot of research.
I'm sure you did. Let's go. Okay. What kind of research? What? Hey, that's all you gotta do to make millions? That's all you got.
Okay. So Fundrise is a real estate investing
you see, guys,
service.
that's exactly what I'm saying. This is what their website looked like in 2018. Look at that. It's just boring, right? Like a laptop with it's really, really boring. It looks nothing like this now. It's an amazing website with tons of information.
It allows you to access private market real estate deals that they say should deliver superior risk-adjusted returns over.
Well, private market real estate in general is more risky, and so theoretically, it would deliver higher returns, right? Risky. The more risky something is, the higher the returns. But obviously, there's more chance you would lose all your money
over time versus a portfolio of publicly traded stocks. They even suggest that you could be getting a 12.3% annualized return.
What?
So how?
12.3? What? No way. Let me just get that.
This is a portfolio of publicly traded stocks.
What?
They even suggest that you could be getting a 12.
No. Dude, 12.3? What you guys talking about? Yeah, listen, I just watched that video yesterday. It was some guy, he's trading stocks and cryptocurrency. He literally claimed, he told me that you can make 12.3% a day. A day, not a year. A day, man. He said you could turn $100 into $1 million in like 15 days, man. What are these crazy 12.3 a year? Man, I don't believe it. It has to be 12.3% a day these days to make anything worthwhile. Hey, nonsense.
3% annualized return. So how
Not bad.
legit is this? Okay, so right off the bat, this reminds me of a REIT, which is just a real estate investment trust.
True.
This is pretty much a company that owns a portfolio of real estate that you can buy shares of. Much like buying a stock in a company, you could buy shares of a REIT and be entitled to those ownership benefits of that property.
That's true. Companies like Vanguard, Charles Schwab, they all offer certain ETFs, like E-REIT ETF. So when you buy that, that certain ETF, theoretically, you're investing in the real estate, that Vanguard or Charles Schwab actually own.
However, Fundrise is a little bit different than the typical REIT you see traded on the stock market. And the biggest difference here is that Fundrise is not publicly traded on any stock exchange, but it is publicly available.
Right, so it's a private company. So that is why there's such reduced volatility in Fundrise. It's the type of investment that you just want to put the money and you forget about it. If you buy an E-REIT ETF or like an actual E-REIT, then it's going to be just like the stock market where 5% up one day and then COVID happens, we're down 20%. So it's a lot of stress because Fundrise is a private company. There's no trading, so there's no volatility. So therefore it's a stress-free, relaxing investment. Set it and forget it, as I've been doing.
Being publicly available, this means that anyone can invest in their fund because they comply with SEC regulations and disclosures. This way, they don't limit themselves just to accredited investors, much like Grant Cardone of Cardone Capital will. This means that anyone is able.
That is the thing that Fundrise. That's their theme. That's what they're trying to do. They're trying to democratize the whole real estate market. Right? Previously, you need to be an accredited investor, having at least $1 million in your bank account or whatever it is, and $200,000 a year salary at least, just to have an opportunity to invest in these great real estate projects. But Fundrise changed all that, making it available to the masses. And that is so important because why do the rich always get richer? Why are all the rules in favor of the rich? Why can't I put a little bit of money and then over time, maybe even my family, my kids, their grandkids, they will have a lot of money? Thank you, Fundrise.
To invest in Fundrise as long as they meet the minimum $500 deposit.
Okay, so I understand that this video was made in 2018. However, guys, a lot of people did not like that there's a limit of $500 to be able to join the platform. Well, guess what? Fundrise listened as of August of 2021, the minimum investment is just $10 like this. It is less than a Chipotle. It is less than a McDonald's. It's less than the Burger King. It's literally nothing these days. I think a bread costs $10 these days. So, hey, do not miss out on this opportunity. Let's go.
For the starter plan. Now, because Fundrise is not publicly traded, this means you can't just simply go online and sell your portion to get your money immediately you would with a REIT.
You can.
And that essentially ends up locking up your money.
Well, listen. I do not think that you should compare a private company to a public company. You should compare Fundrise more to like a physical real estate, right? Because think about it, when you buy a building or when you buy a condo, you put the money in and you cannot 2 days later, sell that condo for a profit without consequences, right? So I believe that Fundrise, should be treated more like an actual physical purchase of real estate rather than comparing it to a public company where pretty much anybody and their mother can go and put $100. It doesn't mean they actually, believe in the platform. It doesn't mean they actually own, a percentage of those e-REITs, or because you could buy it for $100 and then sell it the next day for the same $100. So does that mean that you owned that certain part of that certain building for like 24 hours? It's weird. Fundrise, a long-term investment, everything takes time.
Now, this is a big concern that I will address later on in the video.
Okay, all right,
so the
fine,
site
no
says
problem.
that they control $1.4 billion worth of real estate.
Okay, $1.4 billion. Let me get you a new metric for 2020. Where we're looking at here. No, we're looking, right here. Yeah, here's the new metric for the 2021, actually. That's the latest update. As of September 30th, 2021, it's about $2 billion. So in just 3 short years, because this is from 2021, we grew by over 0.6 billion. So what, 600 million? Hey, 52%. Hey, this is from 2020. But this is amazing. Great growth. Just saying, the new numbers. The platform is growing. The number of active investors is growing. The number of employees is growing. Actually, if you see this number for the end of 2022, this active investors is at around 240,000. Employees, I think, is at around 270. And assets under management, I think it's at $2.4 billion. All right, let's keep going.
And their stated advantage is pretty simple, much like most real estate investors out there. First off, they have a large access to capital, which is you, from which they can aggressively negotiate real estate deals with. And as they say on their website, to capture maximum growth potential in real estate.
Well, to be fair, any company, any stock you purchase, it's always you who will give the money. Right? It's not like it's any different. You're giving money to Fundrise, or you're giving money to Vanguard, or you're buying an Apple stock, you're giving money to Apple as a company, right? So it's kind of, it's kind of the same. It's kind of the same for everybody.
The key is to buy ahead of major demographic or cultural shifts, understand emerging neighborhood growth, or recognized untapped property potential. And I have to say, to me, this seems like a pretty reasonable goal, and this is exactly what I would be doing myself. Now, the second thing they do is then add value to the property.
Honestly, thinking back right now in 2020, they really did have a good strategy. Really good strategy.
And again, this is exactly something that I've been doing myself anytime I remodel a property. And again, as their website says, most classically
you're a physical property. That's what I'm talking about.
Real estate, we produce value through intelligent zoning, development and leasing, building new urban housing, renovating rundown apartments, and renting vacant buildings. Again, I don't disagree with that one bit. Now, the third thing they do is profit, either through the loans that they originate.
Right. So what actually happens is that Fundrise takes the money that us investors gave to them and they give it out as loans to land developers, right? Now, there's always interest attached to that loan. So those land developers then pay, the money back with interest. That's how you make money in terms of dividends. Very good.
Through rents.
Rent, same thing. When those land developers actually built the rental property, the project, in the end of it all, they rent it, and the Fundrise gets a portion of the rent money, or Fundrise in the end.
Future value appreciation,
or Fundrise then sells the property at a higher value and takes that chunk of money. Amazing, good stuff.
Again, as they say on their website, there is normally greater demand for complete real estate developments. There are many more potential homebuyers for a renovated home than a rundown shack, and more renters for new luxury apartments near a metro than for the previously vacant land. And
that's true. I think that's true. That's very true. Yeah. I would think like newer generations, for some reason, everyone's just okay with renting, but they don't want to rent an old. They just want like a luxury apartment with a pool and a gym. And, they take a bus everywhere. Hey, it is what it is.
I said previously, I totally agree.
Never going to make any money like that, but it is what it is.
Agree with this, and I'm 100% on board with that strategy. So
we'll make money, but the renters won't make money.
I looked into it further to see what their investments looked like. And in the process of doing so, I found some great examples in Los Angeles, in a market I know
Los
really
Angeles.
well. So I'm pretty confident that I can use these as a benchmark to see what they're doing. Now, most of the properties located in Los Angeles did not show up on Google's reverse image search. I wanted to find out exactly where these properties were, look at the public records, find out more details about them. But I did notice a commonality between the homes that were on Google's image search that did come up.
That looks like Zillow.
They all had the same selling real estate agent. So I took the liberty to look at this agent's sales history, and in doing so, I was able to identify a lot of the properties that did belong to Fundrise. This also includes many properties that were not listed on
Why you gotta say it like that? Fundrise. Like Fundrise. I don't know, it's weird.
on their website. Then upon looking closer at the public records of each property that this agent represented, I noticed another common theme is that they were all owned by the same LLC located in Washington, D.C., and every different LLC was numbered. We have Neighborhood Partners 6, Neighborhood Partners 3, Neighborhood Partners 4, and so on and so forth. So this is definitely them, as also referenced and confirmed in the fine print.
They're in Washington, D.C.
So right off the bat, since these are areas I know really well and that I see firsthand, gotta hand it to them. I really like the areas that they're investing in, and I really feel...
You see, I don't know if this would work in 2022, those same areas, because I believe that I think Washington, D.C., as well as Los Angeles, New York City, all those big cities, metropolitan areas, I think they've seen like the craziest migration out of those places to the suburbs because of the COVID-19 and stuff like that. I think Washington, D.C. lost somewhat like, 20% of like population or something like that? I don't know. I'm not sure about those numbers, but I heard that somewhere.
Like in 5 to 10 years from now, these areas will have...
That's why actually recently, guys, if you watched any of my previous videos, that's why Fundrise is changing the strategy around one of their funds called an Fundrise E-Fund, because that E-Fund, damn, I stopped him at a really weird position. Look at his face. But anyway, they had a strategy, that Fundrise E-Fund had a strategy, exactly what Graham is talking about here, to buy these like older houses and build real estate in these metropolitan areas. But I don't think that worked out because of the COVID-19 pandemic. So kind of a lot of people probably not buying it or moving out. So they changing the strategy for that certain Fundrise E-Fund. So they're adjusting and molding to the new life. All right, let's keep going.
Have vastly improved. Right now, I'm seeing a lot of investor money pouring in these areas. Because it's really one of the last affordable areas in Los Angeles.
I mean, $500,000 to $600,000 house, and that is the cheapest housing available in Los Angeles. Oh my God! Oh, just move to Florida, man. It's much cheaper.
Where you can still buy a house for under $600,000.
Just
and because of that,
$600,000.
so many people want to buy in. It's eating up all the supply. The demand is going through the roof, and by doing so, the prices are also going through the roof. So long term, I'm really bullish on these areas. And not only are they buying cash-flowing rental properties, but they're also investing in hard money loans for development in those same areas.
Just $600,000.
So I took a step further to look through the market analysis, and I did not find one thing I disagreed with.
Just $600,000, guys.
They cited buying around the metro line here in Los Angeles, and this is a train that runs all the way from downtown LA.
Just $600,000. Hey, hold on. Just 600. Just 600,000. Just 600,000. Hey, here we go. Hey, I just take it. Just take it, bro. Just take it. Hey, 600,000. Hey, 600. Just take it, man. For the shithole, man. Take 600,000 for the shithole, yeah.
Development around this expo line, and it's just moving east.
Ridiculous, bro.
They are buying ahead of the curve by maybe a few years.
for a shithole.
So we're still a few years away from those areas just really reaching their full potential. And not only that, but their business plan for Los Angeles development is exactly what I would be doing if I had the capital and if I had the time.
You have the capital.
Buy single-family residences, rezone them for small subdivisions, and then sell them off one by one. And they're completely right that there is a huge housing shortage here in Los Angeles. And by doing that, it's a pretty low-risk way to profit. So I'd venture to say, notwithstanding a total economic collapse or war,
What? Did Graham just predict the COVID collapse and the war in Ukraine. We have both now. Holy moly, macaroni. Graham can see the future. Let's go, baby. He predicted it in 2018. What? What? Whoa. Wow.
Doing pretty well with those subdivisions. And it also goes without saying that buying in an up-and-coming area is just a good thing to do. So from the Los Angeles perspective, they seem to have a pretty good grasp about what is poised to take off in the future and what will be doing well.
They did their homework.
Be a catch to this, right? 12% returns.
Only 12% return only. I want 12% a day.
0.6 to 7.3% dividends. You
Dividendos.
don't just get that for investing $500 minimum into a fund. Or do you?
$10 now.
Now this is really where the research comes into play.
Let's check it out.
Anyone can look through their website and get hyped on all the fancy words and high
And
promises.
pictures, yes.
But how many people read through 225 pages of their fine print?
Apparently 1 page an hour. Yes, you did read 1 page an hour.
This guy right here.
Sorry, 1 page a
Here's
minute.
what
You
I
did
found.
read.
Now,
You
besides
did
a
read
lot
it
of
1 page a
legal
minute, baby.
jargon,
Yes.
Here are the 5 things that stood out. The first one is lack of liquidity. By investing in Fundrise, you really...
Come on, Graham. I mean, come on. That's... Listen. You investing in real estate, there's going to be a lack of liquidity. Of course, there's going to be a lack of liquidity. The thing is, there could be a lack of liquidity even with regular stocks. If no one is going to buy your shares, there's going to be a lack of liquidity, right? So, it is what it is. It's real estate. It's going to be a liquid investment.
You just end up tying up your money for 5 years or potentially longer. Even though if you do want to sell, they do offer a lower redemption rate.
Well, okay, so I understand this video was made in 2018, but again, guys, this has completely changed on August 1st of 2021. There used to be penalties. For example, if you try to withdraw your money between 90 days and 3 years after depositing it, there was a 3% penalty. 3 to 4 years is 2% penalty. 4 to 5 years is 1% penalty. And if you withdraw after 5 years, there is no penalty. Well, this was completely changed a little while back, August 1st, 2021. There's 1% penalty, just flat all the way from 90 days to 5 years, just 1% penalty. So again, they reduced the minimum amount of money that needs to be invested from $500 to $10, and they reduced the penalties from 3% to 1% flat, and no penalties after 5 years for withdrawals. Yes.
To buy back your shares. But they make it very clear that there is no guarantee they will have somebody to buy your shares. As they say in their fine print, if we do not successfully implement a liquidity transaction, you may have to hold your investment for an indefinite period.
I mean,
it goes
listen,
on further to say, Fundrise has the authority in its sole
if it's a good company, there will be someone there to buy the shares. Hopefully.
discretion to limit redemptions by each shareholder during any quarter, including if the manager deems such action to be in the best interest of the shareholders as a whole.
Not bad.
Basically, they're just saying, if you want to sell early and get your money back, we'll do our best. But there is no guarantee we're going to be able to sell it, and there's no guarantee you're going to be able to get your money back when you want it. To me, this is really one of the biggest drawbacks. Now, even though I believe real estate...
I mean, yes. Hindsight 2020. But, guys, COVID-19. A lot of people lost money because they decided to sell at the absolute bottom. They thought COVID never going away. The stock market is never coming back. The real estate market is not coming back. People lost a lot of money because they got scared and they sold. You know, those, the beginner investors who don't really care, they don't know what they're doing, right? But guess what happened in Fundrise? There was no volatility. I had my money in there. They told me, hey, we're locking you out for 60 days. I said, okay, and then after 60 days, we got a freaking amazing, 10 or 12% return in 2020. Now, guys, the whole thing with this is that, listen, you should need your money early. If you're investing money in anywhere, in the stock market, in the real estate market, in the cryptocurrency, that money should be considered gone. There should be no such thing as, oh, we have an emergency, I need to sell something. You should only invest after you have some sort of emergency fund somewhere saved in cash, or some sort of a high yield savings account, or a CD account. You should not invest money that you think you will need in some sort of an emergency. And even if you don't think you're gonna have an emergency, you need to have some money saved on the side, so stuff like this doesn't happen where you need to go sell at a loss just to go pay off your mortgage. Just saying.
It should be
not financial advice.
A long-term play.
Yes,
you should not be getting into
agree.
it just to ride the appreciation wave and sell it like a year later.
Well, there you go.
I do acknowledge that things do happen. Things do happen with the market, and you may want to rebalance your portfolio or just need access to your money. And in this case, you're not guaranteed to get your money back. Now, in
Well, listen. You're not guaranteed with other stocks either, because what if you need the money when the stock market is down like 10 or 15%? Now you actually got less money. If you just have an emergency fund, leave the stuff alone. Get to the emergency fund. I get your point, Graham. I get your point. I see it. But at the same time, no one should invest any money unless they have an emergency fund or they think they're going to need the money sometime soon. The money invested, consider the money gone for the next 10 years minimum.
Fundraise's defense on the bright side, this also reduces panic selling. Imagine if we had another 2009 recession and everyone wanted to sell at the same time. This would be absolutely detrimental to not only Fundrise, but to all the other...
That's another thing. If everyone was able to sell all at the same time because they're scared during the COVID-19 pandemic of 2020, and Fundrise would have went under. And people would have lost money because they would have gotten less money. Now, because they did not let anybody sell, people making tons of money now, and the company is better than ever.
Other investors who would then have to sell and lock in their losses at a discount in a down market.
Exactly.
But imagine if a 2009-like recession did hit and everyone wanted to sell. And instead, Fundrise just said, you know what, you guys? We ain't selling.
Wait.
You not selling.
Kenny.
You not selling.
Kenny.
You not selling. We're gonna hold it.
You guys.
We're gonna wait for the
I'm
market to
going
go
home.
all the way up, and then we're gonna sell.
You guys, I'm going
You wanna
home.
sell? Well, I dislike and unsub.
Dislike and unsub.
Here we go.
Dislike, bam!
And that was a
Nah,
terrible
kidding.
Cartman
Oh, boom,
impression,
she's gonna like you back,
absolutely
baby.
bad. But
Ain't no
anyway,
problem.
you see what I'm trying to say here. They're really trying to protect you against yourself.
Makes sense.
And for all the people who did sell in 2010 and 9, they got screwed. If they just held on, chances are they would be making money today. But ultimately, even though I do believe in the buy and hold strategy,
that is the only strategy.
Just having your money.
Well, unless I listened to that dude on YouTube yesterday, he told me some dude was like, hey, man, you can make $5 million in 15 days. How much you need? Oh, just $500. Just give me $500 and I'll give you $5 million in 15 days. Investing in SPY.
Tied up to a point where you don't know if you're going to be able to access it, if you need it, is a bit alarming to me. Another smaller concern I have with this...
Greg, you don't say alarming. No. It's just people need to be responsible with their money and not invest their life savings into one uncertain thing, right? It's the same people who bought Bitcoin at the top and they put like they were saving for 10 years to buy a car or a house, and they're like, Bitcoin got hyped up. They bought at 65K, now it's at 40K. Now they're sitting there shitting themselves, working at Walmart, trying to make that money back. Like, people just need to learn to be more responsible. And I appreciate you, Graham, that you're promoting this responsibility, unlike some other YouTubers that I'm watching that just shilling everything.
Is that it is also likely that your shares would not be accepted as the primary collateral for a loan.
Wait, what? I want to read this. Shares currently exist. It will be difficult for you to sell your shares and be able to sell your shares. Public offering price. I'm not sure if Graham, or maybe I'm not getting it completely, but I think what they're talking about here is something called Fundrise IPO. Fundrise IPO. Fundrise internet. Yes, internet. Do not correct me. No, it's internet public offering. So what I think they're talking about here is the Fundrise IPO, where I consider it a once in a lifetime opportunity where Fundrise offers you shares of a private company. Yes, you could get shares of a non-publicly traded company. So imagine getting shares of Apple before they went public on a stock exchange, right? Just a little example. So this is what Fundrise is doing. So I think what they're saying is that you won't be able to sell those shares until they go public. And listen, full disclosure, Fundrise is risky, but Fundrise IPO is even more risky. But the rewards, if and when they go public, are going to be crazy, guys. If you're not sure what I'm talking about, I have like 3 videos about Fundrise IPO linked in the description below in my entire Fundrise playlist. Check them out, man. It's a really good opportunity, man. You guys might enjoy it, and I think we can all benefit from it. And the second part, it says something about the collateral loan. You could use your share. Oh, so okay, I get it, right. So, but my problem with that is that how many people, how many ordinary people, how many normal people actually use their investors as collateral to take out a loan for money. Now, people are familiar with houses, right? You have like that mortgage equity, home equity. So if the price of your house went up, the difference between how much money you owe and the price of the house, you could get the loan for that much money and do something else with it. It's the same concept with the stocks. Where people could go to the bank and say, you could, here, I have this much in stocks or cryptocurrency or whatever it is. I don't think cryptocurrency is allowed yet, but in stocks, and you know, I need a loan. So the bank gives you a loan at, let's say, 3% interest, right? But let's face it, how many people actually know that they could do that and they can benefit from it? Like normal people, like people that work a 9 to 5 somewhere, like in Chipotle, like right, you don't know, or like someone just, you know, a regular guy, right, a regular guy who's working. Like most people don't know that. The trick is that is how the wealthy get even more wealthy, right? They never sell their real estate. They always, they never buy a house full out front. They get a mortgage. They never sell their stocks. They actually use their stocks as a collateral to take out a loan. And assuming historically, if the stock market is giving somewhere between 9 and 12% return a year, if you take out a loan on those stocks as a collateral and that loan has a 3% interest, you're still making a profit anywhere between 6 and 9% on the money, as well as you get to keep your hard-earned money, hard-earned cash, and your stocks and do more stuff with them. And that's really how you get wealthy. You never sell, you just take out a loan. I'll be like, oh, I don't want to pay interest. Well, listen, you pay the interest, you pay the 3%. You pay the 3% because the stocks that you would have sold to get the same money, right? First of all, you would have to pay a long-term capital gains tax on it right away. You lose any investment you had maybe from 10 and 15 years ago. You won't be able to buy in at the same price. And again, historical 9 to 12% return. That's the trick, guys. Maybe I should make a video about that.
Your shares would not be accepted as the primary collateral for a loan.
Not yet.
This means that in the event you wanted to use all of your equity in Fundrise as collateral for another loan, chances are you're not going to be able to do that.
That's okay, because most people don't do it anyway.
If you own physical real estate or have a stock brokerage account or a 401k or an IRA, basically your money is there and you really can't do much with it besides leave it there.
Well, listen, you can't do much with 401k or an IRA until you're 59 and a half years old either way. So by that time, right? So it's, you know, you can't use that money anyway. The first two are correct though, the real estate and the stocks.
Now, the second concern I have with them are their fees, which they say are 1% annually. Now, this to me seems a little high when you compare it to other lower cost REIT options, like Vanguard's REIT fund, which only charges 0.26% annually. That is 74% lower than Fundrise. But
it's true. I looked up this fund or any ETF, Vanguard Real Estate ETF, and the fact is, now we ignore this COVID pandemic, okay? So here's the fact. This is where we you know, before COVID and where we are now after COVID. Here is only a 13 a 14% return from 20 till now. 14%. Fundrise, if you add it all together, you literally had like a 40% return. You literally had like, okay, maybe not 40, okay, maybe like a 30 to 35% return in these 2 years. Okay, so yeah, the fees are a little bit more in Fundrise. It's a private company. It's always going to be like that. But, those publicly traded, ETFs, real estate ETFs, it's, first of all, look at this volatility. Now, you would get a heart attack right here, right? When the COVID hit, you would get a heart attack, right? Now, can we zoom out to, look at this, look at this. Look at this, 2009, you get a freaking heart attack here too. Fundrise, nice and flat, don't worry. Hey, everything will be okay. Everything will be okay. It's almost like we just keep going. It's just like we would have just keep going, But yeah. Anyways, let's go.
In Fundrise's defense, they are a smaller company that
Yes.
does invest in riskier assets that should hypothetically generate higher returns, which should compensate
Yes.
for the higher management fee. But the 1% isn't really the only fee. There is a potential origination fee for any time they buy something up to 2%. And then on
That's
top
included
of that, there
already
are also
in the return.
disposition fees anytime they sell something. So all in all, your fees could range anywhere from 1% to 3%.
Well, there's actually hidden fees when you buy stocks as well. So, for example, in Robinhood, when they claim that there's no fees, there are actually fees, but they're embedded in the price of the stock already. So people don't know about it, but there are fees. Otherwise, how would Fundrise make money? How would Robinhood make money? There's no ads on Robinhood app or anything like that. There's obviously fees that are embedded in the price of the stock. But what they tell people is that there's no fees. So, and then, it's okay.
Annually, depending on what they buy or sell that year. This means that even though they advertise a 12% return with dividends reinvested and with appreciation, you could be left with as low as 9% after fees, not accounting for inflation. Now compare this to the S&P 500.
What do you mean not accounting for inflation? All the other returns from other stocks are not accounted for inflation as well. That makes, this doesn't have, it's just, the inflation is inflation no matter what you do.
First of all, has over 100 years of proven history behind it, and has also generated a 12% return.
100 years of corruption and freaking manipulation.
Before inflation. And assume you invested in an S&P 500 index fund like Vanguard's, which only charges a 0.04% annual management.
All right, but now he's saying like, assume you invest here, assume you invest there. The whole point of investing with Fundrise, right, is that you're diversifying, right? I'm all for public e-REITs. You should have public e-REITs. You should have stocks. You should have cryptocurrency. You should have a full ETF portfolio. You should have 401k. You should have the IRA. And then you should have Fundrise. No one is saying to dump, I would never say that, to dump all your money into Fundrise and don't have any other exposure to any other investment vehicles. Zero chance I would say that. I had stocks, I had crypto, I had physical real estate before I got into Fundrise. This is just another way to diversify. This is another way to get into a private real estate business. There are other companies now that you could do that, but this should be a 15%, 20% of your total portfolio, maybe 10%, not 100%, never, ever, for sure. So this comparison's like this. If you were to do this with this, no, it's not the same, because if you were to buy physical real estate, well, now you're renting, and now you have a renter. Now you have to maintain it. You have to cut the grass. You have to pay somebody to cut the grass, to fix the boiler, to fix the HVAC, to fix the roof. Right? It's completely different. You cannot compare stocks to. I know a lot of people do that, but stocks to ETF to real estate, these are all different investment vehicles, and it's just it shouldn't be 100% of your portfolio for sure.
Fee. This is still 3% higher than what you would get with Fundrise, with 100 years of history behind it, and without tying up your money long term. And also without the uncertainty of investing in a new company.
If you don't tie up your money long term, you're gonna end up paying a freaking 25% taxes on your day trades, right? You know, the ones that never work, where 99% of day traders lose money. They go all the way to zero. And then some weird guy is just like photoshopping how he trades every day and making like $5,000 trading with a $100,000 portfolio. Bullshit.
So from this perspective, Fundrise just doesn't seem as good. Now my third concern, and this is probably one of the main reasons why I would never invest in Fundrise.
What?
And this is because their dividends are taxed as ordinary income at your ordinary income tax rate. Now,
wrong! Completely wrong. No, 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 no! That is not true. If you're reinvesting your Fundrise dividends, the very small portion of them are taxed at your ordinary income. Most of them are qualified dividends that get reinvested into certain E-REITs and E-funds, and you do not pay taxes on them. On my $115,000 Fundrise portfolio, I had very small amount of dividends to begin with because I invest with a long-term growth plus portfolio, so most of my returns are in terms of appreciation. But I did get $600 in dividends, and only $32 was taxed at the ordinary income. The rest is qualified dividends that are not taxable yet.
in Fundraise's defense, this isn't necessarily a fault of Fundrise. It's a fault of just dividends being taxed at a higher rate. And this would be the same no matter what stock you invested in that paid you out dividends. See, the thing is,
that's not true. That's not true. If you reinvest the dividends, you don't pay taxes on them. I have stocks. I have Pfizer. I think Microsoft pays a dividend. I have Coca-Cola. They all pay dividends. I never pay taxes on that. No. You just gotta make sure you reinvest them. On the other hand, if you, maybe what he means is that when you get the dividends, instead of reinvesting them to go in your bank account, then yes. Well, that's because it happens every 3 months. So it's kind of like when you trade, it's less than a year. You get taxed on it as ordinary income. You know? Yeah. I think he means that like the dividends you would just keep them and not reinvest them. I think that's what he means.
Main advantages of holding an investment long term is being able to capture the long-term capital gains tax rate, which for most people is
15.
probably going to be between 0% or 15%.
Yes.
And also, anytime you own physical real estate, you're able to depreciate the value of the property against the rental income,
right?
Potentially leaving you with all the rental income completely tax-free. Now compare that to being taxed
20%
or
But again, like I said before, diversification. You should have, first of all, you should have an emergency fund somewhere so you don't lose your mind if something like COVID-19 or the war happens again. And, after that, you have to diversify. Physical real estate, Fundrise, public E-REIT, stocks, cryptocurrency, and whatever else you want.
Higher on Fundrise's dividends, plus any state income tax on top of that, or paying a long-term capital gains tax rate of probably 15%, or absolutely no tax at all if you depreciate the rental property against the rental income. Now, my fourth concern with Fundrise is what would happen to these returns in a down market. Now, even though I have to say,
we already know, baby. We kept all our money and then we got some more. Hey, ain't nothing gonna happen in a down market. Ain't nothing nothing gonna happen. Nothing happened. Whoo, man. That's the least stressful investment I had during COVID-19 is Fundrise. Everything else, I was like, Fundrise, I was like, I don't care. Yeah, I don't care. I can't take the money out anyway. I don't care. Yeah.
say I totally agree with where they're investing and their strategy.
Okay, very nice.
At some point, their growth will plateau. At some point, this is bound to happen, whether it's a year from now, 5 years from now, or 10 years from now. This type of growth is at some point unsustainable. So even though these returns are very much possible right now, maybe in the future you see that the growth is slowing or you see more potential elsewhere. And again, tying up your money in something like that at the sole discretion of Fundrise, whether or not you should get it back, really limits your options in the future to seek and exploit out new opportunities. And they
well, listen. All right. I see definitely what you're saying. But the fact is that every company at one point, for example, we could talk about Coca-Cola again, right? They were a growth company. They grew so good. That's when Warren Buffett was investing in it. And then it obviously plateaued because they kind of reached their maximum, everything that they can do, and they're still developing new products and stuff like that. We could look at the chart of the Coca-Cola here, actually. You could see even the most of the mature companies, they still get you that, like 5 to 10% return. Not only that, but they also start paying you dividends, right? And if you reinvest these dividends, they're obviously, tax-free. Okay, so as you can see here, this is Coca-Cola. This is Coca-Cola over many years, and the average is like I think 8 to 12% return per year over a long period of time, and they're paying a really good dividend. So there's nothing wrong with becoming a mature company, slowing your growth, but rewarding your investors with dividends. Nothing wrong with that.
Much acknowledge this in their fine print. The significant growth we have experienced, particularly with respect to assets under management and revenues, will be difficult to sustain.
Well, weren't they wrong, huh? Now we're in 2020 and we went from 1.4 billion to I think now 2.05 billion in just 3 years. I think it's even more now. So Fundrise was wrong to say that about themselves.
Now the fifth concern of mine, and again, this isn't a huge issue by any means.
Okay.
Just a tiny concern.
Yes.
Is with the referral fees. Well, it's definitely a very nice gesture to get.
By the way, guys, last week I released a video about the referral program. Fundrise has completely changed their referral program. Now, before, they would just give me and you, they would just give a certain amount of days to waive the fees, the advisory fees. Now, you can get up to $100 for opening a new Fundraise account using my link down below and then just depositing just $10. So you can literally deposit $10 and get either $50 or $100 added to your account. It's a super good offer. Check out my video about Fundrise referral fees from last week, and then use my referral link if you haven't already signed up and you're interested in getting into Fundrise.
Give your customers something for referring you business, and I am totally okay with that business practice, 100%.
Yeah.
It does make you think. Are people giving better reviews than they otherwise would have because they want to get the sign-up bonus or referral bonus?
No, come on. The old program, all it gave you, it literally maxed you to $150 a year. Right, because it gave you, it used to give me 1 year advisory fee waived, which is 0.15% of your account portfolio, and on a $100,000 account portfolio, that's $150. So it's $150 a year. Even if 10 people sign up with my referral link, I'll just get 10 years worth of advisory fee waivers, which equals to $150 for the first year, $150 for the second year. So there's who would sell out for $150 a year? Come on. The new program is much better, but they still limit you to just $900 a year in referrals.
Right now, they're giving away 3 months of free management for everybody you refer into
Yes, that's what I was
Fundrise.
talking about.
And it appeared
Free
as
management,
though
advisory
before this,
fees.
they were offering $100 for everybody you refer.
Oh, wow.
When this does happen,
They came
honest
back to
reviews
this.
and constructive criticism tend.
Wow, they came back to the old program. I like that. Hey, that means we're expecting some nice growth this year, guys. Let's go.
To get buried under falsely positive reviews for people that just want the bonus. Like I said, anytime you see a positive review with a referral link, it is harder to gauge whether or not this is a legitimate review or if it's made better to sound than it actually is because the person just wants the referral. And like I said, that isn't necessarily a fault of Fundrise, and many companies do it, but it is just something to consider in the back of your mind. So anyway, overall, given this, I personally just don't see the rewards as being worth it for investing in Fundrise. And between Fundrise and all the other investment options out there to choose from, I still believe owning physical real estate would be the top most profitable choice. And for anybody who
like I said before, you do not choose between this and that. Do both, and do them slowly and patiently.
Who doesn't want to do that? Just owning an S&P 500 index fund would give you very similar returns, better tax treatment, and more liquidity, just making it overall, in my opinion, a better investment overall than Fundrise. Right now, I really like what Fundrise is doing, and I like the areas that they're investing in. But between the high management fees and tax treatment, it just puts it at a disadvantage.
Tax is
and
not so bad.
long-term, sustaining these types of returns will get more and more difficult as time goes on. So overall, no, Fundrise is not a scam. They're completely legitimate, and there are a lot of positives that I see with this. But unfortunately, the downsides from my perspective just outweigh the upsides, rendering other investments as just being more attractive when you put them side by side. Again, all of this...
I would love to hear your opinion about having Fundrise as a part of your portfolio instead of choosing it, instead of something else, right? So Graham, would you have a Fundrise as part of your portfolio, maybe 1 or 2 or maybe 5% of your entire portfolio value in Fundrise? Would you be open to that?
This is for entertainment purposes only, not financial advice.
Oh, by the way, same here, not financial advice. Not me too.
Do your own research. So
do your own research. And watch my entire Fundrise playlist down in the description below. It has 37 videos about everything and anything you need to know before, during, and after investing with Fundrise.
Anyways, you guys, thank you so much for watching. And like I said, this video took forever.
I
appreciate it. So if you guys appreciate that, make sure to drop a like. I click like many times. Boom. People are breaking their phones or breaking their computers. They're sending bills in the mail for broken phones. You don't have to do that anymore. We just tap the like button. And then go ahead and while you're at it, if you're not already subscribed, make sure to tap the subscribe button and tap the notification bell so YouTube notifies you anytime I upload a video.
You could do that for me too, guys, if you want.
3 times per week.
I'm almost at a one.
Also, if you want to add me on Snap,
you can. I'll do that for me too, guys. You can click that subscribe button, that like button. I almost have 1,000 subscribers. Let's go. I have Twitter, Instagram, Trey1. Hey.
Snapchat.
All right, guys. Thank you so much for watching. I hope you enjoyed this reaction. He definitely brings up some really good points. Maybe in 2018, Fundrise didn't solidify itself as a top platform in this private real estate market. However, after 4 years later, one pandemic later, and now we're still going through the war, I think we could confidently say that Fundrise proved to us that it should be at least a small portion or a small part of your portfolio, and you should never ever invest money that you can't afford to lose 100%. All right, guys, thank you so much for watching. Please don't forget to click that like and subscribe button. I really do appreciate it, and I will see you in the next video. Take care. Peace.